It's Thursday, the 25th of July, 2024. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories to get through in 5 minutes. Let's go. Story number 1, Treasurer Jim Chalmers has released draft merger reform legislation, which he hopes will make the merger approval system faster, stronger, simpler, more targeted, and more transparent. It's quite the wish list, isn't it?
It sure is. Subject to making it through Parliament, the new system will commence in 2026. It aims to speed up the process for mergers that are in the national interest and give the regulator stronger powers to identify and scrutinise transactions that pose a risk to competition, consumers and the economy. Now, theoretically, the laws should make it easier for the majority of mergers to be approved quickly so the ACCC can focus on the minority that give rise to competition concerns. The idea is that mergers should occur and do occur quickly. Don't get caught up in the paperwork. ACCC Chair Gina Cass-Gottlieb said the reforms were important because they also address the deficiencies of current merger laws that allow too many tie-ups to escape regulatory scrutiny. So the regulator will have more power to look into deals.
Just quickly, Sean, cleaning up the system seems to be a bit of a theme this week, with the corporate regulator yesterday releasing its review of how well the share market works in Australia, basically whether it's a level playing field. And generally, while things are pretty good, some attacks on the integrity of the market could have hurt mum and dad investors.
Yes, ASIC looked at how the market operates, whether there's price movement ahead of major announcements. Some of the key findings: the ASX has less than half the amount of unusual trading ahead of M&A activity compared to global peers. A couple of bad periods. COVID-19 was poor. Late last year was also poor. About 5% of trading activity was what ASIC called abnormal. Cleaner sector, telcos, least clean, real estate investment trusts, Michael.
All right, moving on to story number 2 now. And the federal government has received about 4 times what it needs to offload a 10-year bond, with $55 billion in orders for the issue, which was expected to raise between $11 billion and $12 billion.
Yes, that sort of oversubscription that shows there's clearly plenty of investor appetite for 10-year government bonds, which kind of allows me to talk about ANZ. The corporate watchdog, ASIC, is examining ANZ's role in the sale of $14 billion worth of government bonds last April. There are only a handful of organisations that governments trust to deal with these massive bond issuances. Now, it's emerged that ANZ provided the federal government with inflated bond trading data. Essentially, it kind of boosted its resume when it was trying to win the right to be involved in the bond issuance. It's also being investigated by ASIC for allegedly manipulating what's known as the benchmark 10-year futures rate, which is akin to the cost of the bond. ANZ's in hot water on this one, Michael.
Indeed. Story number 3, the Aboriginal and Torres Strait Islander population of Australia is now over 1 million people, an increase of 6% since June 2021.
It's actually a projection based on levels of fertility, paternity, mortality and internal migration, and it suggests that the number will reach 1.2 million by 2031. While Indigenous Australians are more likely to be living in the regions, there is a shift towards major cities. Perth and Brisbane are the 2 cities where fastest annual growth is expected over the next 10 years or so. New South Wales is still the state with most Aboriginal and Torres Strait Islanders. In total, they comprise about 3.8% of Australia's population.
Story number 4, Elon Musk, Sean, has asked Tesla shareholders to be patient after the EV manufacturer reported its 4th straight disappointing quarterly result.
Elon Musk, patience. Ironic, isn't it? For the June quarter, profits were disappointing, though sales were higher. The margin it makes on cars narrowed, and in after-hours trading, its share price tumbled 8%. Mr. Musk told investors that Tesla won't unveil the highly anticipated robo-taxi until October, and it will only be a prototype. A new lower-cost car won't go into production until the first half of next year at the earliest. A planned factory in Mexico is on pause, and a humanoid robot that Mr. Musk claims will send Tesla's valuation soaring won't be ready anytime soon. Also hurting Tesla is its emissions credit scheme. Tesla sells credits to other car makers seeking to comply with emissions mandates. Only half as many were sold in the June quarter.
Last one, story number 5, and this one is quite incredible, Sean. Profits from the Crown estate, we're talking the Windsors in the UK, jumped to about £1.1 billion last year. That's nearly 2 billion Aussie dollars on the back of some, you've got to say, pretty smart deals involving the leasing of seabed sites to offshore wind producers.
In the Crown Estate annual report, it says that earnings last year more than doubled And as a result, the royal family will receive a payment, what they call the sovereign grant, of £132 million. That's up from £86 million the previous year. Net profit from the Crown Estate is passed on to the government, and then the Crown itself receives a fixed yearly payment. Some really interesting facts from the annual report. The number of visitors to Buckingham Palace and Windsor Castle returned to almost pre-COVID levels. Family members took part in 2,300 engagements in Britain and abroad during the year, which was actually a lot less than the total in the year before the pandemic, when Queen Elizabeth II and her family managed 3,200 official engagements. Now, remember, over the past 12 months, the King himself and Princess Kate of Wales have had illnesses. I think it's Princess Catherine of Wales. I should say that, Michael. The number of messages the King and the Princess received by mail wishing them well following their health announcements was 27,620. And Buckingham Palace also made progress on goals to recruit a more diverse workforce. It said it now has 11.4% of its employees from ethnic minorities, still short of its 14% target.
All right, there we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 25th of July, 2024. Remember to hit follow on the podcast, and if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed, wherever you listen to podcasts. And don't forget to check out our sister podcast as well, How Do They Afford That? All about making your money work a little bit harder for you. This week's episode is a very close look at money inside a relationship. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.